Good morning, people. Right, you're looking at yesterday's cable chart, and I didn't even give cable a look in today. I went straight from my currency pair indicator, currency strength indicator should I say, and New Zealand dollar JPY was looking the best pair to have a go at. New Zealand dollar USD was worth having a look at as well, but JPY got my first choice for drawing the lines, as you can see here, and or NJ should I say. And basically I started at the monthly and drew a load of lines on there. I'm going to do this one from scratch later on, so don't worry guys. But I just wanted to get this video out of the way so that you know, I could show you that first thing in the morning. It's not even 6:36 yet, it's 6:35. That's weird. Oh no, it's 6:36 now, it's just turned over in the morning. And as you can see, you know, monthly, that's the previous month, do this month just the wicks. I didn't even bother doing the lower wick because there is no way price is going to get down that far. Weekly high and low of the most recent candles. High and low of this one because this would affect price. Price hasn't closed yet, so it could easily ping all the way back up, and that resistance will hold as support. This one didn't need doing because it's far too high, and the price is bearish. As you can see, this could turn green, remember, as well. So we were initially bullish, but these white lines are ascending and descending trend lines. They're drawn on the lower time frames. We can clearly see from this that we are in a pullback north long. I drew the level on that high there, I drew the level on that high there, for the same reason as this one. Price is not closed yet, so all of these candles could in fact force the price back up throughout the course of this month. This is a weekly chart, of course. Not sure what those lines all are. They're probably from that cable chart I talked about. So yeah, forget all those. Daily, same job. Now we can clearly see what's going on. Low, high, high, low, high, high. So we're trending upwards. We've got a pullback on this upward move here. So the lows are drawn on all of these candles here. And the highs of these candles here. There was no need to draw anything on here, of course, because we've got these support levels in front of us, and I'm only looking for 5 or 6 pips on this. So this is the last bit of the trend: low, high, high, low, high, high. Failed to make a new high, so we start to sing the song: high, low, lower high, lower low, lower high, lower low. It's not closed yet, so we're attacking the reversal level, if you like, and we've smashed through it, that daily low. Still not drawn these levels on this chart. They're on the H4 if memory serves me correct. So now we're looking at H4. There you can clearly see the trend in place: high, low, lower, high, lower, low. We're waiting for a close, remember, below that H4. As it stands, below the daily, I do apologise. As it stands, this would be a very dangerous level to consider trading short at, because we can clearly see it's a massive level of support and resistance. But that's what drawing the lines do for us. We've got the PPZ here as well, just to be safe. So what this is here now because I wanted to go down and make sure what gap I had. The low of the nearest H4 candle low is there. You can clearly see now we have a complete gap here. The resistance has not held as support because that's closed below that level there. I'm talking about that one, the H4 high. That's critical because we do not want to trade into old resistance. This level was drawn on as well. The new resistance level. I didn't draw this one in because this one superseded it. It's lower, therefore that's already been broken through the high of that red candle there. So I expected the price to go to the low of this green candle down here, but the flip is always going to have something in there. It might be an H1 low, it might be an M30 low. So don't get greedy, guys, and remember you've got to add the spread on. It's got to go through beyond that green level a couple of pips, well, whatever the spread is, 1.1 pip, before it'll close your chart. That's important. That's something a lot of novice traders don't appreciate or don't take into account. All the while I've been I mentioned in one of my tweets yesterday, go back and check everything, that you haven't missed anything. Check this currency pair is still indicating the correct configuration, i.e. weak, strong yen and weak New Zealand dollar. It's dropped down now. Australian dollar is taken over as the weakest pair. So AJ, actually I think I might have drawn some lines on AJ. Yes, I did. No, I didn't. No, these are still the lines from NJ. But I did have a look at it. So yeah, go back, check everything still looks right on both your indicators, and it does. Didn't get the bust, pullback and break, although this may well be it, this H4 candle. We've got 3 hours to go of it yet, so and if it does, then expect a monster pullback and then possible selling still. But as I said, you'd really want to be through this support here and close through it. So I guess that might happen at the end of the day. And then look what we've got here, a massive gap. We'd have to go on the left hand side and do some levels, but sorry, that meant to be a yellow one there. Still half awake, not had my first coffee of the day yet. Half asleep even. Can't even say that right. The highs, remember, resistance acting as support. And then ultimately the lows. But the reason I put all these levels on these higher time frames is because the gaps are, you know, that looks nothing, and it is actually nothing, but there is a possibility that that gap looked like nothing on the daily chart, but when you get down to the H4, you've got a perfectly, I think it's about 13 pips or something, that gap there. Clear air. See, it's actually to the green level, the bright green level, the support level, is actually about 20 pips, give or take a pip or two, and 16 pips to that flip zone. So I'm only after 5 or 6 pips this time in the morning. In fact, I took net 6 pips off of this trade, and I'm, you know, that's my income for the day. That's all I need. Anything else is a bonus. But as Billy TT says on his thread, and I always take snippets from what I consider to be excellent traders, he always uses the analogy, you know, 5 pips is my bread and butter, that's what I need to earn, or want to earn, should I say. He doesn't need to earn it, nor do I, but anything else is credit for your losers. If you get it wrong, you know, you've got 2 or 3 extra trades in a day or more, and when you do get it wrong, which inevitably you will, then you just take it on the chin and move forward. Don't dwell on it. It's a good way of thinking about trading, and I took that away from him. Plus I took the 8 o'clock cable trade from him that I will be looking at closely this morning. So it's worth a read of this end of the thread. Don't start the other end, because everyone trading evolves. Just like me, I've got 200 or so videos up here. By all means have a look at the early ones, but you'll see how much my trading has changed due to continually learning stuff. And the more I make these videos, the more I learn. So back to this particular trade, you can clearly see this was a no-brainer trade to the downside. Let's go back up to H4. This is where I drew my ascending trend line, connecting this point to this point. This became valid when that high was broken there. Valid support. That's the only way I draw my trend lines, and that were connected. And then obviously this was here on the H4 chart, but when it wasn't, you know, when that broke, we drew the line, and then lo and behold it came back and tested it. And then the line is still would have been validated here with the break through that high there, and lo and behold it comes back and tests it. And when it breaks it, that's when you can start to think about potentially shorting. There was no valid reversal that I can see on here to the short side on H4 at least. Then we did get one here, low, high, high, low, higher, high, high, low, lower, high, lower, low, lower, high, lower, low. That is the break and close. Didn't pull straight back. It's already done the pullback, that big wick. So be careful of that. And there's the support tested as resistance here. And then it's done its stuff early. For whatever reason, there might have been news or something. So you always have to take news and stuff into account. Then it's pulled back and used this this support as resistance, and then it's continued down. And as you can see, it's just continuing down to that flip zone now. This was a no-brainer short trade, absolute no-brainer. But again, I don't get greedy. There it's going. Excuse me. Once again, the histogram is doing its stuff as well. And this is just a thing of beauty. It's a great time of the day to trade, guys. So if you are in the UK and you have to do a full-time job, then this is perfect. Excuse me. In my opinion. And this is how I've always or at least for years and years and years and years, probably 10 or 12 years now, like to trade. I call it the pre-Frankfurt, pre-London grinding time, because the price is being pushed to a level either by the algos, most likely by the algorithms. And look at that flip zone being tested there now. The light green level. So they're pushing to a point where they can really play their games at 7 AM when the DAX opens, and 8 AM when the FTSE opens. You don't want to be in that time of day unless you absolutely have absolute confidence in your understanding of the charts. Oh, the other thing here was the S1 had been breached and closed below before I entered my trade. You know, so I've stacked up all these tick boxes again. This is right on every time frame. My analysis, this descending trend line, was doing its stuff. Remember, it became valid when that low was broken by price here. I could have drawn a better level on there, but tightened it up properly, cleanly should I say. But you know, I can't even say up or down right before my first coffee of the day. Just trade like a machine. Trust your trust your analysis, trust your indicators, and trust me that I've been watching this happening for, since I started 15 years ago, since I devised this method probably 10, 12 years ago, and then just along the way swapping out indicators when I find a better one, or adding in when I learnt not to use them. So that's gone and done exactly what I thought it would do. It's moved that it's moved right through that flip zone into the potential support level that it needs to break and close below. The levels were all drawn on a clean chart this morning. Well, it was a clean chart for NZJPY. Didn't even bother tidying up my cable chart, as I showed you first thing. That's it. What can I say? This, once again, has come through. So, to those traders that are thinking of doing this but have a full-time job, set your alarm for 5 o'clock in the morning. Have your morning coffee. Don't do this like I do. Do your analysis. And then, when you get home, there is quite often an end-of-day trade that will give you, and that's where, again, this will come in quite useful, and this will come in extremely useful, because if you wanted to trade, say for example we're looking at cable, wanted to trade that short, this was the middle of the night unfortunately, but wait for it to drop below the zero and do your analysis on the candles. We're on a 30-minute, remember, here. That's clearly broken down there. Low, high, high, low, high, high on the red candle. Wait for the close below the low there. Something like here, that would probably about midnight. And it pulls back. If it goes against you, wait for it to come with you again. And then, you've got the hourly 8 EMA in your favour. You've also got another low, high, high, low, high, 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 low, lower, high, lower, low, and close. Those are the best ones, the shallow ones, because your stop only needs to be above the level 2 really, which is the high of that candle once it's broken. But that would be a minuscule stop, and then something like a 5 times reward risk, or 4 at least. So early morning, late at night, you can learn this, and then days off and weekends use that FX Blue trade simulator, back test the stuff, and before long hopefully you will build up your confidence enough to hit those trades. But the beauty of that early morning trade like this today is that it is the grinding period. Trends work, support and resistance levels work, the indicators are very good, the method is solid. Thank you for watching. Have a great day, guys.